first of all, we have a special guest with us today for another interview in our series. And let's see. First of all, could you please tell the audience a bit about yourself? I mean, where you work, what you do, and if you have any projects involving solar, how have you interacted with it in any way?
Yeah, absolutely. Thanks for having me. It's a pleasure. I love sun sustainability. I think you guys are doing good things. Um, but yeah, my name is Alex Bonelli, and I work for a responsible, in other words, ESG asset manager called Calvert, which is now a subsidiary of Morgan Stanley. So what that means is we basically invest in companies that we identify as leaders in environmental, social, or governance factors, right? And we invest across various asset classes. So that means like public equities, fixed incomes like bonds, real estate, and other asset classes as well. But we employ a strategy, something called ESG integration. So we basically overlay traditional financial analysis, like looking at a company's fundamentals, balance sheet, things of that nature, with ESG metrics. And then through that analysis, we basically identify those companies we want to invest in. Within Calvert, I
Mm-hmm.
work for the corporate engagement team. So I work as an associate for that team. What the corporate engagement team does is we interact directly with the companies that we're invested in to try to generate positive externalities as well as positive financial return. So the goal of our engagement team is basically to increase total shareholder return
Mm-hmm.
by facilitating a dialogue with companies through direct engagement, right? We also employ a long-term investment horizon. So that's why our engagements are focused on generating value over the long run. So with the engagement team, right, I work and I do research for companies and also across sectors. I also do something called proxy voting, which is actually voting on the ballots of the companies that we're invested in. And I also do project management. So internal projects in terms of workflow management and also leading and tracking our various initiatives. So that's kind of what I do in a nutshell, and that's the team I work for and the company that I work for. And in terms of my experience with solar, so before I joined Calvert, I actually worked in the renewable project financing space. So what I would do is I would work to basically come up with financing mechanisms for renewable projects. So one of the projects that we were working on, my previous job, was a new floating solar array for the DC water. So that was like a new concept that hadn't been previously done before. So a lot of the research just entailed at looking at macro environments in terms of what was the deal in terms of regulation, what was the deal in terms of prices for floating solar arrays, and then also looking at geographically specific conditions like, is it feasible given the weather patterns, topography, etc., and then marrying the two. So I did that in my previous job. And then currently, right, we don't directly engage with solar projects, but what we do work in is we engage with utilities, and we make sure that utilities have greater renewable energy in their energy mix and also have plans to decarbonize their existing energy mix. So that decarbonization may include greater solar panels. It also may include other forms of renewable energy like hydropower, wind, things of that nature. So we do work like that, and we also work with coalitions to try to promote more of those agendas. So that's kind of the work that we do right now.
So, how has your approach when working with, let's say, in part with to finance that floating solar array, so kind of a
Mhm.
governmental thing? versus working to expand renewable energy through the lens of a big bank. How has that been different?
Mhm.
And how is the approach different? Perhaps what changes did you observe? And what's
Mhm.
the, let's say, viewpoint of the goals and future market projections in each
Mhm.
sphere?
Okay, yeah. So I'll start with the difference between the perspectives from financing the project to actually investing in the project. So those are two very fundamentally different perspectives. So when you're looking at project financing, you're really looking at how to basically best allocate the resources to make sure the project is a success. So when you're doing that, you're looking at like different regulatory conditions. You're looking at who like what the project is actually for, like who the project is actually for, right? And it's more of a consideration into facilitating project development. As an investor, right, on the other end of the spectrum, you're pretty much looking at the best projects, the projects that are best suited to generate returns, the projects that have the best metrics in place, and also the best returns, both financially and also in terms of positive externality generation. So
Mhm.
I would say as an asset manager currently, right? When we look at solar projects, we're basically seeing if the operators have solid reporting and disclosure about their ESG conditions. We're looking at if the operator or somebody who's asking for financing has a solid track record, right, in terms of paying back their debt. Also, the fact that the system or whoever might be taking on debt is not overburdened, over leveraged. It's also an important facet. And we also look at like green bond history as well. So all those factors pretty much come down to just basically being able to distill, all right, which ones are the best projects, which utilities or other operators are best positioned to take advantage of renewable energy, such as solar. Right.
And
So
you
that
have
was answer to question number one.
oh
Question number two. So you asked how. So your first question was how perspectives differ. What was your second
oh
one?
the second one was how I guess viewpoints and future goals as well for the market differ uh, in
Mm-hmm.
these two spheres.
Okay. Um, so I think in terms of like project financing, I think the market is developing quite rapidly. So right now, we're in pretty much the nascent stages of renewable energy production in the United States. It's developing quite rapidly. There's a lot of tailwinds, including regulatory, market conditions, and also just general public sentiment. So I think that as a result of all those tailwinds, you're going to see financing costs decrease greatly. And consequently, I think you're going to see a lot of increased production and installment of renewable energy capacity, including solar. So I think it'll make it easier. I think the market as it develops, it'll mature more and there'll be less assumptions and less risks implied with these projects. So you'll see more private funding as well geared towards renewable energy projects. Right now, you see a lot of public entities basically taking the place of private investors because of the underlying risk, or an underlying risk stemming from uncertainty, really. So you see, for example, in a lot of states, there are something called green banks, and green banks are designed to basically provide financing for green projects and take the place of where investors would normally not, or typically don't do it currently. So that's what we've seen from the project financing end of the spectrum. We're seeing more private investor support as the risks go down with a maturing market. From a investor perspective, we are also seeing the rise of, we're seeing the rise of ESG considerations all around. Specifically with renewable energy projects, we're seeing those develop, and we're seeing more utilities considering decarbonization strategies and employing more of a renewable energy focus within their decarbonization strategies. So I think the market is really primed for success and growth. And I think that from an investor perspective, I think there's going to be less uncertainty. There's going to be more reporting about the projects that happen. And I think that as a result, investors are going to be more keen to put their dollars at work for renewable energy.
So you said that private investors are playing more and more of a role in these projects. Would that mean that the government is sort of, I guess, like stepping back with their role? What have you noticed in terms of like how governments have been playing, the role governments have been playing in these projects, and also like how their incentives have been changing? And then also, what is your view on the changes that are happening, if there are any?
Okay, so I would say yes. I think that the government is taking, maybe state governments don't need to be as active as they have been in the past. I think at the federal level, the federal government is definitely championing renewable energy development. You've seen with the Biden administration, they are clear proponents of climate change mitigation and adaptation, with specific carve-outs for significant renewable energy development within the United States. So at the federal level, there's a ton of money being pumped in to basically facilitate more renewable energy development. Also, standards are being set. So at the SEC, right, which basically governs financial interactions, financial companies, or companies that trade at the stock market. They govern disclosure and reporting standards, right? They're also looking at incorporating more green ESG standards, right? So I would say at the federal level, you're still seeing a lot of government intervention, especially with the Biden administration. I think at the state level, the necessity for green banks may decline, and that will probably stem from the fact that these projects there'll be more of a track record to view the effectiveness of these projects. So I would say that with that, the state will take less of a leading role, and I think private investors are seeing the benefits of these projects, I think, twofold. So as an asset manager, I think there's a lot of client demand to support climate change mitigation strategies. One of the best ways to do it is by investing in energy projects. I also think from a project perspective, I think renewable energy projects typically do provide solid, steady returns, right? And I think that that dual-pronged approach of increased client demand and also solid track record is going to propel more and more private investors. So I think that they see a very positive horizon, and I think that they're going to keep funding more and more projects. So hopefully that answers your question.
In this balance of, the transition to private investors, first of all, do you envision any public-private partnerships to smooth out this transition as perhaps state and local government steps back and private investment continues to grow? And another question, in that private investment, what would you say is the balance between small time investors and big banks, and perhaps organizations in the middle? And how do you think, what's the importance of this balance, and how do you think this balance should hold?
hmm Yeah, I mean, I think public-private partnerships, PPPs,
Mhm.
are a great way to finance large-scale projects, especially more large-scale infrastructure projects. I think that if we're trying to reach the levels of renewable energy that will have substantial impacts on lowering our carbon footprint, I think we're going to need to have significant infrastructure in place. So to do that, we will probably require that PPP type setup. I can't speak to the specifics of setting that up, but I can say that that would be a good way of diversifying the risk. So therefore leading to more investors being pulled together so that not one investor has to harbor all the risks associated with the projects, things that have substantial financing requirements. So I think that the benefit of PPPs is the reduced risk for each investor and also the scalability of projects, right? And then in terms of the actual makeup or composition of partners within a PPP, I think that it's probably going to require a diverse set of investors. I think that if you look at from the banking perspective, right? From the so as investment banks work with project or companies that are financing renewable energy, right? They're probably going to see more of these projects come about, and as a result, it's going to be easier for them to underwrite these transactions and underwrite the financing requirements, right? So that's on the sell side. On the buy side, I think you're going to see also these banks realizing that to meet their commitments for scope 3 emissions, which is basically like emissions of what you finance, you're going to need to invest in carbon offsetting projects such as blue renewable energy. So you're definitely going to see like the bigger banks benefiting from the renewable energy transition or decarbonization from both the sell side and the buy side. You're also probably going to see a greater influx of smaller banks as the risk is reduced, because smaller banks obviously want to take on less risk. And so I think that you're going to get a solid mix. And then obviously right now you're seeing a greater push towards ESG investing. It's growing substantially as part of overall investments worldwide, especially in the United States. So with that, you're going to see more traditional finance shops shifting more and more towards a ESG lens within their investment frameworks. So I think all around, it's good news for the renewable energy market. I think the real main uncertainty in the United States really stems from the government. Who's which party or who is at which who's at the head of the United States?
Tendai, you had one?
Yeah, I was going to ask. So, what is the market landscape of ESG bonds like? And how does the solar green market bond compare with like other industries and other green industries too?
Yeah. So the ESG bonds, right? That's encompassing bonds that generate positive externalities in environmental, social, or governance factors. Governance bonds don't really exist. So what that means is like they're not really bonds tied to exceptional governance metrics or performance, right? So most quote unquote ESG bonds are directed at environmentally or socially beneficial bonds. And within that, most are actually in in the renewable energy space, most is directed towards environmental, right? So what you're seeing is you're seeing many projects attempting to get green bonds, and to do that you have to become green bond certified,
Mhm.
right? I mean, research is still it's still ambiguous as to the premium that's offered for green bonds, but what can be said is that the heightened investor demand for ESG linked bonds does substantiate projects to offer green bonds, right? So you are seeing a huge amount of green bonds being issued. It's relatively new. I mean, you got to realize that all like these type of bonds have literally, I think they began in 2009 through the World Bank. So it's really only been about 12 years. So the green bond market of the ESG market is probably the most developed, right? There are other socially linked bonds in terms of looking at metrics that it has on social impact, community involvement, things of that nature. But those are less developed. So in general, what you're seeing is you're seeing entities trying to achieve some kind of positive externality generation and incorporate that in their bond prospectus as a desirable marketable factor.
Mhm.
The other thing that we're seeing as well within ESG type bonds is something called a sustainability linked bond. So this sustainability linked bond is basically assigning KPIs, so key performance indicators of a project's success. And it's basically saying that if you don't achieve those KPIs, you will have to pay a higher interest rate, right? So that is something that we're also seeing, and that's a new type of bond that's gaining quite a bit of traction. But yeah, within the ESG bond market, the main players are really like green bonds, right? And then the new development is sustainability linked bonds.
Yeah, I've done a little bit of research involving like KPIs and stuff. Can you go into a little bit like what the KPIs are, or like the general like goal of the key performance indicators and what they're actually like assessing? Just a little bit.
Yeah, so that's so KPIs are specific to each project.
Yeah.
But the main themes are usually around reducing environmental impact. So a good example would be carbon intensity of a project, or absolute greenhouse gas emission reduction. So for a renewable energy project, something that you might see is how does the production of this renewable energy plant lower the overall carbon intensity of your energy mix, right? So that might be a specific KPI. Another one might be also related to overall emissions reductions, right? I think that utilities typically favor the carbon intensity reduction because it allows them to systematically transition to renewable energy. Also, another point to consider, at least for the utilities perspective, is that renewable energy plants are non-dispatchable. So that basically what that means is that they produce electricity when the wind's running, when there's wind or when there's sun. So right now there's not a lot of storage capacity. So basically it's hard to ensure a consistent flow of electricity from renewable energy at all points. So as a result, it's not as easy as it seems to just like turn off, immediately go from all fossil fuels to all renewable energy. So that's why companies or other entities would prefer a carbon intensity metric, because it allows them that time to slowly transition, but also achieve some kind of positive impact.
So what is the role of solar in that whole, let's say, green bond certified market? And
Mhm.
because as opposed to let's say wind energy, et cetera, or just decarbonization initiatives. And in terms of the actual certification, how well is solar doing? Uh, how many? About how much of it is certified compared to everything else, and how what ratings does it get? Does it get better ratings, worse ratings, just in general, etc.?
Mhm. Yeah, so I can't speak to the latter part of your question about how ratings are applied to solar energy projects. But what
Hmm.
I can say about what I can talk about is how solar energy fits within the ESG bond market, or just the overall um, renewable energy market. I think, I mean, if you look at the statistics, um, solar energy, I think, is growing at the fastest pace, maybe, or I think it might be close with wind energy. I think right now, solar energy is also drastically dropping in costs. I think you have a lot of suppliers now that are basically offering good solar panels at cheaper costs. So I think with that, you're probably going to see a greater mix of solar energy within renewable energy portfolios. Um, so I do think that solar energy is poised to continue growing, um, but it will honestly, a lot of it will stem from government support, whether through direct subsidies or other tax incentives.
This past year, have you noticed any big changes to the solar market brought about by the pandemic, COVID? And what have those been like, if you've noticed any,
Mm-hmm.
negative or positive?
Also, how has solar come out? Has it been better or worse?
Yeah.
Mm-hmm. So, um, all right. So with respect to I guess, with the pandemic, um, I mean, I haven't really seen, so from a asset management perspective, right? What we've
Hmm.
seen currently is asset prices at historic highs across the board, especially for renewable energy. So in terms of asset pricing, in terms of renewable energy companies, financial health, they're doing great. And they actually benefited greatly from the pandemic, right?
Hmm.
Mostly because it just happened to be correlated with the transition from the Trump to the Biden administration, greater incentives for solar and other renewable energy producers. So I wouldn't really say that like solar projects may have stalled due to the pandemic. I mean, you could point to larger
Hmm.
macroeconomic factors maybe affecting solar development, like less employment or less people willing to do or actually install capacity. Um, but at the same time, you're also seeing lower interest rates to do so. You're seeing like pretty opportune times to install solar panels. So I think, honestly, I think the solar market is pretty unfazed. But I can't really say if it's like good or bad. I think generally, I think it fared well. Um, so, and I mean, the only real issues that, I mean, the main issues that have come up, as for many other things, has been supply chain bottlenecks
Hmm.
affecting production. So a lot of these solar panels are made in China, and then with Chinese ports being closed or production being delayed or slowed down, I think that's also affected the price of these solar panels, and also maybe delayed production. So, but
Hmm.
all around, I think positives outweigh negatives during the pandemic.
see.
You mentioned a little bit about like China's role in solar production. Can you go deeper into that? And I guess the recent movement for solar companies to be looking for manufacturers in China due to the cheaper costs.
I mean, you
And
said it
also,
right there. It's cost. Cost is the main motivator. What are you gonna say?
yeah. Also, how would you say because of the coronavirus supply chain and the inability of the U.S. to sustain itself, which has been shown because of these bottlenecks, how would you say, if at all, the government at every level is responding to this, or incentivizing solar to move back and trying to get a hold of that, production project design again?
Okay, so I'll start with your first question about market demand in China. So I think that I think China, pretty sure China is the #1 producer of solar panels in the world. I also think it's the #1 installer of solar capacity within the last 10 years. It's not the leader for sure in terms of overall the renewable energy portion of the overall energy mix, right? Because China still relies heavily on fossil fuels, especially coal, right? But I think China is also transitioning, and also China has made very ambitious claims and has set very ambitious targets for being net zero and achieving net zero by 2050, aligned with the Paris Climate Accords. So I think that you have a top-down approach where the government is basically saying, we want more solar, right? Because we have these ambitious climate goals. We also want more solar because we want a more diversified energy mix, because we want to have we foresee greater electrification, and we want solar energy to be a part of that because it offers a lot of advantages, like stable prices that are buffered or immunized from commodity price shocks, unlike oil and natural gas. Right? I think from the production side, China offers a lot of competitive advantages. Its main one is the cheap cost of labor, and also the fact that it can mass produce these panels. It can mass produce. Its manufacturing is well set up in terms of the actual operations of the manufacturing, and also the shipping and transportation and logistics. So I think it'll continue probably dominating that market, just as it has other aspects of manufacturing. So all the aspects that it's been able to take advantage of in terms of dominating manufacturing, I think the same principles apply within the solar panel market. But in terms of like government support, I think I honestly don't know how China operates at the federal level for providing incentives for solar panels. I also don't know how it operates with like various other levels of government. So I can't really speak to that.
Well, let's go back to domestic, I guess, asset management now. And in the US, how is solar, I guess, seen by big banks? Is it already treated more like an established industry than it was before? And because of these recent innovations and, getting very much commercially cheaper, especially for the regular customer, are there any more recent innovations like that make some solar companies, make them kind of solar unicorns, so to speak? Is it also seen in the scope of technology?
So I think that solar energy is, like I was saying before, I think solar energy is becoming more developed it's maturing as a market, and as a result, it's gaining more support from larger banks. It's getting more financing. So I think that's working to its advantage, for sure. Sorry, what was the other aspect of your question?
Oh, the other aspect, I guess, is the innovation. Is all the innovation provoking, I guess, more of a wave of an investment and a wave of hype, so to speak, as more of a tech industry too. You know.
Mm-hmm. I think that, I mean, I come from the perspective of an institutional investor. So what that means is, like, we invest in more stable markets and more stable companies that have known products or product fit capacity, right? In terms of like supporting more innovative industries, that's usually something that like venture capital or private equity will go into, because it's seen more as a tech investment with like higher risk, also potentially higher reward, right? So I think right now we're at the stage where there's being a lot of venture capital and private equity funding in that space, because there's a lot of new innovation. So with new innovation, you have many options, but only probably a few will actually yield substantial returns. So as an institutional investor, we're not really positioned to take on that level of risk, right? But I think that the more that private equity and venture capital infuse the market with readily available cash, I think the more that these innovations will develop, become more established, and then garner funding from other investors down the investment chain, like institutional investors.
I see. Thank you.
So, sorry. So, what would you say, like personally, what do you think is the most viable financial strategy to expand the solar market, like by solar investors, big banks, and by the government? So, what do you think is that? Yeah, like.
Damn, that's a loaded question. What do I think is the best?
One at a time. But
yeah, no, it's a good question. I think, I mean, for the development of solar energy, I think that you're going to need the continued support of government. I think you're going to need standards at the national level for renewable energy production, and you're also going to need incentives for production. Right now, for renewable energy to outcompete or just to compete with traditional fossil fuels, I think from a project development perspective, I think that one of the best financing mechanisms would be to gather more pools of investors, diversify the risks, have larger projects where you can take advantage of economies of scale, right? Also, like we were talking about earlier, maybe take advantage of the PPP situation, where not only you get private investment, but you also have the government taking on an active role, right? And then, sharing the risks and also sharing the responsibilities of the project.
And also tax.
So,
you can cut taxes, right? In many cases.
Yeah, there's a myriad of different benefits. Yeah. So I see that as definitely benefits. And I also think that from a financing perspective, the more the green bond market or the more the ESG market develops, the more investors will feel okay to dish out their money for these projects. Right now, it's seen as kind of a fringe, not as well established. I think it's gaining a lot of traction. Nobody's really investing many people are not investing in coal anymore or other like fossil fuels. There's a huge movement. So that is really rechanneling the money into more renewable energy projects. So I think that also stems from like public sentiment, government support, also companies realizing that in terms of economics, it makes sense to try to transition to a lower carbon intense energy supply. So I think it's really it's a combination of many factors that will lead to the most optimal financing and development of renewable energy, specifically solar panels. So it really comes down to a combination. So yeah.
So going back to what you said about diversifying your investors, what are the main, like right now, the main like demographic trends of your investors? Like, have you noticed that more like older people are investing, or people who make more income, or people who have a certain like political views? So do you have any idea about like what your investors sort of like, what are they comprised of? What kind of people they are?
Yeah, so as a institutional investor, we deal with primarily institutional clients, so clients with large assets under management. So we don't really have a large mix within our overall client mix. A smaller percentage is retail investors, so like just your average person buying our mutual fund, right? So we really cater towards, our shop caters more towards ESG focused long-term investors. Long-term investors meaning they're trying to hold their assets, or they're trying to invest in companies for the long term. Right? We don't engage in like shorting of companies or other options within investing.
Right.
Pretty much geared towards picking out the best companies or best entities to invest in. Right. So from that, I mean, I can say that on the institutional side, you're seeing a lot of clients basically wanting to align their mission with their investments. Basically, like I mean, many of our clients, our like example would be like a pension fund that is trying to ensure that it has enough cash to support its payments it makes to people when they retire, but also to support a positive mission that generates positive social benefits, positive environmental benefits, and also just positive governance standards. So that has been a general push across markets, is that there's more of an alignment between mission and investment strategy at the institutional level. At the retail level, I mean, I think we're seeing a lot of people care more about the impacts of their investments, especially I think younger investors like millennials tend to value impact generation more, or alongside financial return. So both from at the retail end and also at the more institutional level, you're seeing a general push towards greater ESG adoption. So the demand is definitely there, and we are definitely hoping to leverage that.
Mm-hmm. Well, I know you have to go soon, but final question before we go. Where do you envision solar in the future, and the future trends for solar? As from an, I guess, your perspective, obviously, and also from a macroeconomic perspective, perhaps, what should your average consumer be doing to promote the growth of solar? Not any regulation, not any regulation body, not government, but just the average person.
Yeah. So number one, I foresee that there's going to be a lot more solar panels. We're going to have a lot more solar energy available, and worldwide, and also specific like in the United States. I think that the cost will go down, the demand will rise, I think the economics will show that the greater stability alongside those cost reductions will also just make it so that solar development is more pronounced, right? And I also think that there's mounting pressure from all sides for companies to start decarbonizing or to start implementing and developing renewable energy projects. So this support is literally coming from all levels. And there's also a lot of scrutiny towards companies that are lagging in that respect. So really that pressure is being initiated by the public, which then is being channeled by asset managers and other holders of capital, is pushing towards more of this ESG integration and more of solar development. So I think the market is going to do great. So I hope it can keep improving, like technologically. I hope it can keep getting more efficient. I hope that battery storage also improves so that solar energy alongside with other renewable energies can be utilized more, right? And I hope that utilities also start to transition quicker and start recognizing the benefits more rapidly, right? So that's for sure. And then the other aspect of your question, right? The other, I think you were going for first part, like where do you see it's going to go? Second part is what can the average person do, right?
Yep.
So I think, I mean, the best way to do it is put your money where your mouth is. So I think for an average person, something that you could do is you could see whether you could buy renewable energy within your utility provider. So there's a lot of companies that offer you that option now, even within your traditional utility provider. Say in Maryland, you have Pepco. You can basically see if you can either buy renewable energy credits or have more of a percentage of your electricity coming from renewable energy. So that's one way to do it. I think also investing in funds or projects that are also focused more on renewable energy production. So whether that be more ESG aligned asset managers, also just looking at in terms of ETFs or mutual funds, looking at those that are geared more towards renewable or solar energy production, right? I think that's a big one. And then also just like continued outcries to increase production, to have greater solar. I think the public sentiment can't be overstated, and the investment community takes that into serious consideration. So from an investment perspective, we're here to satisfy. We work, essentially everything comes down to client services. Everything is a service, and if the clients are demanding it, then that's something that we'll want. So the more you demand, the more we'll give, basically. So I mean, I would just say that for the average person, just if you continue pushing, and then as that support grows, more and more people start doing the same thing. That's how we're gonna really make substantial changes and really grow solar energy.
Well, thank you very much. It was great to have you. And yeah, it was a real pleasure.